Oh yeah,
Because
sure.
actually, I was sick even on your previous Zooms. I've been down. And if actually there was a recorded version of it, that could have.
For the last class we talked about order block, I'll be dropping a YouTube video on that. So it's more or less the same thing that we did in the class. So you could watch the YouTube video once I drop it. I'll drop the link.
Okay. All right.
Okay.
Thank you.
Anyways, just let's get to the chat. Let's get to the chat. No time. All right, let me know. Can you guys see my screen?
Yep.
All right, cool. So now today is Saturday, so it's weekend, market is not moving. So let's just do a little bit of replays, right? So now, basically, personally, before I start, before I get into the market, I call it top-down analysis. That is something that we almost always do as a routine. Top-down analysis, basically scaling up the market from a higher time frame to a lower time frame to understand where we are in the market and what we expect the market to do next. Basically, the market moving trends, right? Uptrend, downtrend. So understanding that we're in a particular trend, which is uptrend or downtrend, gives us a bigger horizon, right? So, but then I don't just start from those. I told you guys I trade gold, GBP USD, Euro USD, and oh yeah, that's the basic pairs that I trade. And if you notice, all of them are XXX USD. So that means they are driven by dollars, right? So basically, you can actually trade any other pair that is very comfortable for you. It doesn't really matter. But personally, I chose the particular pairs that I like to trade. So you can have your own pairs. And these strategies actually work on almost every pairs. But they are more profound in these USD pairs, right? Because they are the most traded pairs that we have out there when it comes to Forex and metals, of course. Okay, so the first chart or the first pair that I actually look out for is the dollar index, which is DXY. I'm sure you guys are familiar with it, right? So are you guys familiar with the dollar index? Let me know in the comment section. Or you could just unmute your mic and let me know. Do you know or have you traded or at least seen it before somewhere where somebody's talking about dollar index, the XY and all of that? Are you guys following? Please let me know if you're following. Please do let me know. Okay, Samson said not familiar. All right. Okay. All right, so the dollar index here, which is the DXY, you can find it on your chart. If you're using a phone to analyze your chart, just go to where you add your pairs and just type DXY, or you type dollar index, or you just get it under index, right? So it's DXY, something like this. Yeah, DXY, if you can see this, right? So basically what this does is that it is an indication or an index that we use to measure the strength of dollars, right? So most of these utility pairs actually, or utility currencies, have their own indexes. And what we use this index is to do is to measure the strength or the direction of the dollar at a particular time. So this is the dollar index now, and as you can see on the 1 hour time frame, it's trading to the upside, right? So now, I don't trade this dollar index. I only use it as an indicator to be able to understand what is going to happen with Euro USD, GBP USD, and gold in some cases. Now, this dollar index is an opposite correlation to these three pairs that I trade. Why is it so? Because the three pairs that I trade are, like I said, they are what? XXX USD. So that means this XXX represents the index, right? GBP, we have GBP, sorry, it represents the currency or the metal. This represents GBP, USD, Euro, USD, Gold, USD, AUD, USD. Anyone before this XXX is considered as the normal pair, then the USD is the indicator, right? So all of these are indicators of USD in a way. So this dollar index now is, like I said, an opposite correlation of most of this XXX USD. That means if the dollar index is plunging to the upside, the rest of these pairs are abruptly supposed to go to the downside or supposed to fall. If dollar index is bullish, what do I expect Euro USD to be? I expect Euro USD to be bearish. It's that simple. If GBP USD is bullish, I expect dollar index to be bearish. However, the pair that actually follows the direct opposite correlation of the dollar index is is Euro USD. Now I'll show you that Euro USD is an opposite correlation of dollar index. So it does directly opposite of what the dollar index does. So if the dollar index makes this short higher, and this, for example, it makes this high like this and this retracement here, that is what you're going to see on the flip side of Euro USD. Euro USD will now make a lower low and a lower high just like this one. So it's like an opposite correlation. But you see GBP USD, sometimes GBP USD follows the index as well. That means if the dollar is going up, you see GBP USD will drop it a little bit. Or if the dollar is dropping, you see GBP USD might be going up a little bit. But it doesn't really follow dollar index just like the Euro USD does, because pounds on its own has a very strong valuation. Rather, it has a strong valuation compared to euros. Pounds is actually stronger than euro. So pound usually sometimes lags. So if Euro USD is going up, or you can see that sometimes pounds may not be really going up at that time. So the one that has the most perfect and solid opposite correlation is Euro USD and this dollar index. Now I'm explaining all of this because I'm going to show you guys how I actually use this to trade, right, in this particular setup. So the first thing I do is, now the last one among the three pairs that I trade is gold. Gold usually is an XXX USD pair, right? But gold is a crazy pair of its own. Like, if you're a beginner, or even if you're in this advanced class and you started trading, I would not advise you trade gold. Trust me. I have so many students that say, I like gold, sir, but you say we should not trade gold. I think I prefer gold. I'm very used to gold. Gold is very interesting. So it moves. Yeah, so gold moves like wildfire. It will give you the peep. You can easily scalp with gold. When it wants to move, it moves. But trust me, the day gold will catch you, or more, you won't like it at all. That your small account that you're trading to wipe it within the twinkle of an eye. Gold has a mind of its own. Sometimes dollar can be moving up, gold will be moving down. It doesn't care. It doesn't really follow dollar index just anyhow, just like that, right? So the one that actually follows the dollar index vehemently is the Euro USD, followed by GBP USD. And then we have other correlating pairs, which we'll talk about maybe some other time. I don't know. Now, let's go to how I analyze my chart. Enough of the plenty talk. This is dollar index, right? So I usually start with dollar index to see what the dollar is actually doing, where the dollar is headed, and the strength of the dollar. So I start from basically weekly and daily time frame. So from the weekly time frame, what we're seeing right here is a downtrend. Not really a downtrend though, but yeah, we could say this is a downtrend that is changing into an uptrend. But then in another flip side, you could see that this is more like an impulsive move. One long impulsive move, probably in the monthly time frame or in the quarterly time frame, and then a correction. But forget about all of this because we are in a weekly time frame. So let's focus on this particular area here. Now, remember, guys, I told you guys that we're going to be talking about smart money concept, and then in this smart money, the concepts that we're going to be looking at are what order block, which we have treated already, and I'm going to still be dropping another video on order block. I'm almost done with the video. By tomorrow it should be ready. Then after order block, we're going to talk about liquidity. We're going to talk about imbalance, and change in character. Now, these are the basic components of order block. Of smart money. You understand this concept, these strategies become very simple, very, very simple. And you start seeing the market like a big ass trader, like a banker. That's how you start seeing the market, right? So now I'm still going to explain this concept a little bit, but you may not really grasp it because this video is not about, or this class is not about introducing that concept to you, but I'm just showing you what or how that concept actually works. Now we're done with order block, although we still have more classes to do on order blocks to explain deeper. But now let me show you guys a quick look on liquidity, because liquidity is very important in forex market, in forex trading as a whole. You need to really take this liquidity concept very seriously, because liquidity is everything in the market. And what is liquidity? Basically, it's where the money is, the movement, the accumulation of money. That is liquidity. That's money. Liquidity simply means money in the market, right? And remember, guys, when I was introducing this series to you guys, I told you guys that these banks, these high institutions are always after our own liquidity, right? So most times, one of the perfect way to understand this liquidity thing is this. Let me show you guys this now. Let's assume that we have price move here, come down, move here, and come down. Now, what are you guys seeing here? Let me ask you something. Some of us that already know, please hit me in the comment section. What are you guys seeing here? This thing that I just drew, right? So it's like a movement here, impulsive correction, movement. So what comes to your mind when you first look at this? Imagine this is a market, this is a candlestick that from this thing. What comes to your mind first when you see this? Let me know in the comment section. Double top. Perfect. You see a double top, right? Absolutely correct. Somebody sees an M pattern, someone sees a double top. All of these are correct answers. But let me tell you something. I don't see a double top here. I see liquidity. What I mean by liquidity is when you see a double top, a retail trader normally have been taught that these are patterns, reversal patterns, that, okay, when you see a double top like this, market is supposed to drop. Oh yeah, that is true. Now, when I see this double top as a retail trader, what comes to my mind is I want to join a sell, right? I want to start selling this market because a double top is supposed to make the market drop. And then when I join this trade, where am I going to put my stop loss? My stop loss is going to be somewhere around here. Is that not so? Abi, right? My stop loss will be above. If I enter this trade around here, let's say, where's this stuff? Let's say I enter around here. This is my entry, right? And probably this is where my stop loss, just above this high. That's the perfect place to put stop loss, right? And then, whoa, let's write this. Oh, double top, amazing. When we're in a good setup. We've seen a good setup. Now, this is what most let's mute your mic. Everybody online, please just mute your mics so that it doesn't distract me, please. It's a very interesting class. I'm loving what we're doing right now. So I'm exposing you guys to some really deep secrets. Although some persons might already know this, but if you don't, this is a big one for you. Okay, so when I see a double top like this, as a retail trader, I'm assuming, because I don't consider myself as part of the normal retail traders. I am a retail trader, of course, but then I'm a smart money retail trader. Now, most retail traders are looking at this as a normal double top because this is what we have been taught, right? The basics of forex. When you see, when you talk about chart patterns, we're talking about selling at a double top like this. But then these bankers, these high institutions like JP Morgan, these financial institutions like HPS, banks, central banks, whatever, all of them, they know what you know. They know that this place is a double top. In fact, they are the one that push price to form these double tops that you're seeing. And when they do that, they know that your money is here. This is where your money is, this zone right here. That's where your money is. Because that is where a lot of stop losses are. A lot of stop losses are. So everybody is what? Selling at this point and putting their stop loss just above it. So there's accumulation of money right around here. So much money here. So once this money has been accumulated here, they deceive you and make you feel like, okay, yeah, the market is about to come down. You see it start dropping. Sometimes you do what? You enter for a sell right here. Sometimes you wait for what? A break in structure and say, it just broke a structure. Well, do you guys remember that first class that we did talk about when I talked about market structure? This is what? This is the whole impulsive move, right? But then some people will take this as a break of structure, but forgetting that this is just an internal structure. From here to here is the main structure. So when they do this, something like this, they make you feel like, they're broken structure. We are really, really going down. And what happens next, guys? They start moving price up to this point, and people are still entering more positions, more positions. What you're expecting here is to see price come down. Then what? You see price do this, get to this level, and from there, price drops. So what just happened here? You may ask, oh my, this is crazy. Like, we're in this very clean setup. All of a sudden, price took us out. And when price did that, we lost, price came down in our own direction again. So what happened here? Let me just explain, guys. You see this drop, right? Induced more sellers into the market, closing below this low. It has induced more sellers. And right here, you see price going up to the other upside. So people that have buy stops here already, people are selling, so they have their orders right here. People that trade break and structure, break and retest structure, right? This break and retest, they say, this is what is a resistant level, and price broke this resistant level. They quickly jump in, and when they do that, they put their stop losses right below or below here. That is how these people wipe out people that are doing what? Break and structure strategy, break and retest strategy, and also people that are looking at this as double top. So all your stop losses are here is going to be wiped out, and then price drops. That is smart money for you. And the most beautiful part is this: when they move this price up to this level, it doesn't just stop at the middle of nowhere. If you look to your right, if you look this side, to this side of your chart, you would find out that where this price stopped, there is an order block right there. You probably see one order block hanging there. So that order block is just seated right there, and then what? They come in, mitigate that order block, something like this. I'm going to show you guys in the chart. They mitigate that order block, and then they drop, and immediately that order block is being mitigated. Remember what I told you guys with order block? Order blocks are like where they stack in their positions, where these big institutions match up their accumulated positions, and the moment they trigger it, when price gets there, it's like an atomic reaction. Price immediately moves out. It doesn't really waste time that much. Once you see price reach an order block and it wastes a lot of time, there is something wrong with that order block, or they are accumulating more price. But most times, price moves out almost immediately and just gives you massive, massive movement in the market. So guys, in essence, what I'm saying is that most times, these double bottoms, double tops that you're seeing, anywhere you see those kind of price accumulating, hitting one particular place and not going down, it is not necessarily some kind of chart patterns they are creating. What they are creating there is accumulation of price. They are making people feel like that is a very solid resistance or a support level for you to they want to induce you to jump into the market. And once you do, you put your stop loss, they take out that stop loss. That is what I call liquidity wipe strategy, right? Now, let's get back to the chart. Let me show you guys an example. Remember, I told you guys that XXX are opposite of what dollar does, right? So when I come to the chart like this and I check my chart, now this is what I'm seeing. Do you see? But this is on the flip side. What I just explained to you guys, but on the flip side. How do I remove this? Okay. So guys, what are you seeing here? Are you seeing this as a double bottom? Obviously, it's a double bottom. Right here, we have, okay, let me use this. We have one here. Remember, guys, this is a weekly time frame. I am not trading it. I'm only using it for analysis. let me just take it out so that you can see it clearly, right? So it's properly marked out already. Now, you see where this price just came down to and stopped. Price came down and reversed. So obviously, these 2 points are what? Like a double bottom. Because if you go to a daily time frame, you'll probably see candles, or 4 hours, you probably see candles around there, right? So what is called double bottom. And once you have double bottom, what do we see? Price moving to the upside. And did it actually move? Yes. When price got to this other part, we see that price started buying, right? Market was buying. Obviously, on a weekly time frame, people will be like, whoa, we're buying. Or a lot of times, if you actually buy, you will make profit. You will make profit. It's not like you're not going to be, it's not like they don't work. They actually work. But if you want to get that premium, I know that somebody's mic is on. It's really, really distracting. Mr. Muyiwa, please mute your mic, please. Mute your mic. Thank you. Please mute your mic. Guys, it's really distracting. It's taking me off. Okay, so where was I again? That's a problem with this. Okay, so seriously, I've forgotten where I was. Okay, okay, no problem. Let's just continue. Let's proceed. So we see this one, and we see that price actually moves, right? So it doesn't really mean that it's not working. Most of these double top, double bottom, they do work, but they are usually used to hunt a lot of traders. So if you understand it, you'll be able to know when they're trying to hunt you or where you enter your best positions. Now, remember, guys, once you see how this block now came right down, most times the candle that usually takes out this liquidity comes as a very solid candle, or sometimes it can come as a wick. It can appear as a wick. But when it does appear as a candle, it appears as a candle. Now, once this thing plunges to the downside, where is it going to? Remember what I told you guys. We'll move to the left or to the right-hand side, whatever you're seeing the screen from, to go and check if there is an order block. You can see right here, what is an order block? How do we identify order block? The last sell candle before the buy for an uptrend. Right here is the last, this is the structure, and we have an order block right here. That's why you see me draw this line, drop this line right here, and then see how price came. From this zone, price started moving to the upside. Now, before the news happened, which was last week, price has not even gotten to this point. I drew this thing way before price even got there. Let me see, somewhere around here. Where's my replay button? My replay tool. Here. Okay. Okay, so it was right around this corner. When I saw this move to the downside, price taking out this liquidity, price dropped like this to this point, and what happens next? Price started going up, right? Market started going up. The moment I saw this candle closed here, mitigating an order block. What I mean by mitigating is price is touching an order block that have not been touched before. And what do we have here? All of this is liquidity. So they have wiped out all the investors, like the massive, this is a weekly time frame, remember. So right here, there's a lot of big investors, all this, even swing traders, people that swing trade, most of them, their SL are just right here. That's where I have this X right here. That's the reason for this X. That means this X is signifying that this liquidity, all the stop losses here has been wiped off by this candle. The moment they wipe it off, they start pushing price up. That's when price start moving up to the upside very fast with good solid candles, healthy candles. And what do we see next? Start seeing price accumulate, right? That's it. So we see price moving and then creates the kind of candles that we're seeing right now, moving to the upside. So this already has given me the sign that dollar is going to be strong, is going to be bullish, is going to be going up. So if dollar is going to be going up, this brings me back to my pairs that I trade, Euro USD, GBP USD, and gold. I'm expecting what? Euro USD to fall. If dollar has given me the indication, sometimes dollar index may not give me the exact thing I'm looking for, but if it does, then I use it to trade my other pairs. Sometimes I may not see anything here, so I'll just concentrate only on the Euro USD and just analyze them the way they are. But I use this to help me. So the moment I saw this, I just had a very strong confirmation. It already gave me that, okay, they have done what they want to do. They have induced people into the market. They have taken out liquidity. Now they want to start running with the market. And once they start running to the upside, what will happen to Euro USD? Euro USD will be running to the downside. They will be falling. Exactly. Now let's go to a lower time frame. This is a weekly chart, right? So you're seeing this clearly on the weekly time frame, but it may not look exactly like this on the lower time frame, but then we've gotten what we needed already. So this is it on the daily time frame. Daily time frame, this is where we had that long push to the downside. It went up, gave us this double bottom that we saw right here, and price moved up, came down. Now look at how this one just clearly came down and wiped out all the liquidity, and then price started moving up. Now you see right here, this is price moving, right? And then you see another order block that we have right here. Remember I told you guys that market always reacts to an order block, whether the order block is valid or not. This is an order block because this is the last buy before this impulsive sale happened. And then we see price reacting to it, right? When it goes to this point, it reacted, came down, went up, dropped a little bit again. This news dropped it, and then it started moving up again. So this price moving up signifies Euro USD falling, GBP USD falling. Please, am I making any sense? I've been talking since and I'm not getting a response. Am I making any sense? Let me know. Unmute your mic, say something, or drop a chat. Drop it in the chat. Am I making sense? Are you following?
Yes, sir.
Awesome, awesome. Any other person, are we following? Let me know. Awesome, awesome. Okay, so let's proceed. So now let's go to the 4 hours before we check. On the 4 hour, this is where you actually see clear things, right? You see your areas of interest and all of those things, blah, blah, blah. Now, remember what I taught you guys as well. This is an impulsive move from here to here. All of these are impulsive move, and all this are pullbacks, right? Pullbacks. And you see how market is taking out all of these pullbacks. Now, I drew this line right here because this is one pullback that have not been mitigated, one pullback that have not been taken out. This is one pullback right here, and this candle took it out. This is another pullback, this candle took it out. So basically, we're expecting price to even move even higher. I was even expecting price to take out these ones because we have an unmitigated order block right here. You can see it, right? So we have this imbalance, which is one of the components I'm going to teach you guys again from smart money concept. Imbalance, very important concept as well, but we're not going to go into that right now. So this is market moving to the upside. Now, on the 4 hour and even 1 hour, it may not even give you that. It will give you like the feeling that market wants to drop because we're seeing these candles the way they are, these small breaking structures, blah, blah, blah. Market wants to drop. But at the end of the day, this market probably will just keep buying. It might drop a little, but to keep buying because of what we saw on what they call it again, on the higher time frame, right? So let's go to. Let's check out Euro USD now. Euro USD. Okay, let me hide all of this, my plenty drawings. Okay, dokie. Remember what we saw. Now, this is a weekly time frame, so I want to also start on a weekly time frame right here. Remember what we saw from the dollar index, right? Now let me even just clean everything so that I can start again. Delete. Okay, good. So weekly time frame, what do we have here? This is almost like equal level. Remember, equal level are the levels that smart money or institutions always want to hunt. When they see equal levels like that, it can be the levels may be equal in twos, or it can even be more than two. It can be something like this, up, down, like this. All these are equal levels, right? Equal level with that equal level. So once you see things like this, market ranging in this direction, be careful. Be careful. If you are in an uptrend, know that market is supposed to break out, right? This could be like a flag. Market wants to break to the upside. Before it breaks to the upside, watch what will happen. They will wipe out liquidity, probably from top. They will induce buyers. make them think that they've started buying, drop it, wipe out this one as well, all the stop losses that are here, when they wipe it out before they move price in the direction. These people are very smart, guys. They know what you know. So if they don't do stuff like this, they won't have the opportunity to stack in their positions. Okay? Always have that at the back of your mind. These big institutions, they cannot just go into the market with 100 billion. It's very, very hard for them to do that. So before they can stack in all their positions, they need to wipe all these small from the market to create space for themselves to be able to accumulate their positions to make massive profits. So here we go. Market drop down, give us this equal level, this Euro USD equal level, market drop from here. Then we have what? One impulsive candle. Look at how big this impulsive candle just came, wiped out all the liquidity that is above here, and the market started dropping. See this solid candle, market kept dropping and dropping. And that is why we have that drop. Remember, dollar index is moving up, Euro USD will be moving down. So let's go to the daily time frame and see what happened. Yep, daily time frame. Exactly what we saw from the dollar index itself. Now, look at how this is accumulated right here. One rejection, which proves that this is like a solid resistant level, and then price came right through it, and then price started dropping. So already we're still on the impulsive move in this particular trend, but the moment we break this level right here, it confirms everything. It confirms everything to the downside. However, we already have a clear indication that market might break this level. Now, look at the entry that I took. This one, if you guys can remember, I dropped this setup, but it didn't still activate. Now, coming to a smaller time frame, look at this. Even within the smaller time frame, we have what we call equal level right here. Can you see this, guys? Equal level. This was before this actually happened, though. I dropped this setup, if you remember, before even price got to this point. Let's assume that price was somewhere around here, right? So now to the left side, we have this order block that is standing here. And just below this order block, we have this equal level. 1, 2, 3 levels equal. And this is all like a resistant level, right? And above the resistance is an order block. So we have an order block just above the resistance, which gives us a clear indication that they might want all these people that don't understand the concept of order blocks will start selling from here, because we have resistance, triple top. So they assume that our price will start selling from here. But you, with the understanding of smart money concept and order block, you know that, see, there's an order block here and there's imbalance, which we're still going to treat much later. Imbalance of price action. So this is a clear smart money strategy that every person that understands this concept knows and is going to be waiting for it. So therefore, that's why we wait to see how price will now wipe out all the stop losses, then starts dropping. And look at what happened. But in this case, see how price started dropping even before going there. A lot of people now think that this will not become invalid. But the money is in the waiting, right? Remember, guys, when I dropped that, I said we just have to wait. Go and watch those short clips that I dropped. I said we have to wait. See how the news happened. When the news happened, and I remember I told you guys that news are just excuses to move the market in the direction they want to move to, but faster. Now, this particular case, we didn't get the price coming directly to to this order block to come and mitigate it right here. It didn't get to this point. That is why I didn't get into this trade, but I got in for GPUs, which I want to show you guys. But however, what happened here was that liquidity was taken out. You see this wick that just jumped up, wiped out all the stop losses that people had here, and then price started dropping. That's how we see price drop. Two things will happen here, guys. These guys may come back and push this market up to close this liquidity right here before it starts dropping, or they might just continue this drop. However, me, I'm not going to enter, right? Unless I see a break of structure right here, then I will probably start looking for that sell on this particular pair, because what they will do is that they can make people, even because they try to outsmart even the smart money traders, because they know that smart money traders now are beginning to understand these systems, right? So they will also try to outsmart them. So you have to be even sharper, because guys, we're trading against these people that are, their algorithms are way beyond our comprehension to some extent. So I'll probably wait for price to probably come back and see a solid candle close, like like a candle closing here, mitigating this guy. When I see that candle and then I see another drop, it start striking sell, 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 sell all the way. Stacking that position and put your SL just above it and ride it. That's how I roll on this one, right? So for GBP USD, we have the same thing. For GBP USD, this class is going to end in like 2 minutes, guys. Okay, I'll reload it so that we can take questions. I'll reload it so we can take questions. I'm in a good mood today. Yep. Now, for GBP USD, guys, look at what happened, right? So remember, I dropped all of this setup for us. For GBP USD, you have to understand that most times it may not be necessarily equal levels on the same path. Now, this is what we call trend line liquidity. Look at the order block sitting right here. That's why I drew this. And then look at this trend line liquidity, right? It just formed as a form of trend line and then make people feel like, once trend line is broken, we're entering for the buy. Right now, look at how they just came, wiped it. The news just pushed the market. The news was just an excuse to go and close this order block that they have here, right? So once they close it, look at this was the one I actually took at gold, right? If you guys can remember. So you see this trade right here. It's a sniper entry, zero drawdown. That's how they do it. And the moment it hits, it starts dropping. That's how you see the move very fast, super sniper move. And what do we have? Price started dropping. The unfortunate thing was that this happened on a Friday, which obviously we know that when Friday is the day the market closed, right? And then after that, we start seeing a very slow, sluggish movement. So what is going to happen? What am I expecting from this? I'm expecting price to still hover around here. This is still an order block that it created, taking out these lows. You see right here. Can you guys see this? It's going to end in a few seconds. Right here, you see this line that I drew? It's another one, liquidity. What do we have here? Double bottom, right? 1, 2. And price what came down, took out this double bottom and then started plunging up a little bit. So I'm expecting price to still come down to this zone, come up to this zone right here. That's why I have this order block right here. So price should just come down, mitigate problem, continue dropping, and then I'll jump in again on the sell. Already I took my positions out. I only have one that is left for the long run to just see how it goes. Already I'm break even. So guys, that was how I was able to take these two particular trades set up. Gold was a little bit different. Like I said, gold doesn't really follow all of this most times, but it has its own way. I have a strategy that I use for gold as well. So this class is going to end here. After a few minutes, I'll still drop a link, and that link is basically for us to ask questions and just interact, right? So let's do that now.